Yo, what's really good, people? Welcome back to the channel. Today's video, I'm going to talk about the top movers and fallers. I'm going to touch on the Shopify and Joe Rogan deal. There's been a lot of movement with the Shopify stock based off the back of this deal. And, what does this mean for future deals in the future? And, potentially for Shopify stock. But before I get into all of that, I want you all to do one thing for me. One thing. No, it's not hit that like button, although I think you should do that anyway. I get asked a lot, and I've been getting asked a lot, what stocks I'm basically watching. And I try and answer to the best of my ability without advising people to look into those stocks. The stocks that I'm either currently looking at or videos that I've done on stocks that, I'm interested in, etc., etc. So I thought it'd be nice and interesting if all of you go into the comments right now and put one stock, at least one stock, you can put more if you want, that you're currently watching or looking at. And I think that might inspire a lot of new investors to have a nice little starting point in terms of looking at certain stocks. So yeah, put one stock that you're currently watching for whatever reason into the comments below, and it'll be interesting to see what comes off the back of that. But before we get into today's video, like, comment, subscribe, help the channel get to 6k subscribers. Appreciate everyone that's been commenting and liking and subbing and DMing and just supporting the channel and so forth. Apologies for not doing a video this week. Again, it's been a little bit, I'm finding myself a lot more busier during lockdown, which is it's probably a sign of the times, all them Zoom calls. But yeah, it is what it is. Instagram at Infant Investors, and also Twitter as well. And if you're wondering what app I'm using, freeched.io/infant-investors. The link will be a pinned comment and description. Sign up, deposit £1, and you will get a free share of up to £200 if you are new to the market. So in today's portfolio update, I'm going to talk about the top movers and fallers first, but right now I'm on the 7-day view, and you can see it's been a very, very turbulent week. It's been turbulent. It's been up and down. Luckily, it's ended up, so we thank God for this. But up and down, up and down, up and down throughout the course of this week. Can you see my scrubber? Yeah, you can see my scrubber. It's been going up and down throughout the course of this week, and yeah, it's just been quite a volatile week. And there's been a lot of different headlines affecting a number of different stocks in a number of different regions, not to mention a lot of the macroeconomic factors that's been going on. So I will try and leave some links in the description for your own perusal, but I won't get into every single up and down movement for this week. But let's get straight into the top movers and fallers. So the first top mover to talk about is my most valuable stock as at the moment, MVS. I don't know if I like MVS. I'll have to find a new word. But anyway, it's MVB, most valuable business. That's what I like. It's the MVB rather than MVP. My most valuable business right now, and the most valuable stock that I currently hold is Shopify, currently at $824. We've seen that this week. It's got a hockey stick, it's a little Nike tick curve up, and it's gone up 4.61% this week. And currently I'm 166% up on this stock. I've seen the comments. I know I need to respond to some of last week's and the week before's comments, but I've seen it where people are saying, sell Shopify now, sell, get rid of it. I'm not going to be selling Shopify anytime soon. Shopify have announced a few extra things this week which just further reinforce that. First of all, they've announced a buy now pay later scheme that they're going to be doing for all of their merchants, which I think is good. It's just a nice added feature to allow people to spread the cost of their purchases over a period of time and so forth. But the big thing that Shopify announced is Shopify Balance. You got to have balance, NatWest Balance. Listen, Shopify Balance is effectively their bank account. They're launching a bank. I mentioned a couple of weeks ago, that made no sense. I mentioned a few weeks back that Shopify was the third most valuable company in Canada, and they were behind Toronto Dominion Bank and RBC, which is also a bank. And obviously I did not expect an e-commerce giant to be superseding banks in terms of market cap within Canada, particularly RBC as well, just because of their global reach. But they managed to do so. So I think it was last week or the week before last, they actually became Canada's most valuable company, surpassing those two banks. And now they're rubbing salt in the proverbial wounds by actually launching their own banking product, which is called Shopify Balance. So Shopify this year will launch Shopify Balance, a platform that gives merchants an account in which they can manage their cash flow, pay bills, and track expenses. The Canadian e-commerce company announced on Wednesday. Shopify Balance will also include a virtual and physical card, which businesses can use to access their money and earn rewards for their expenses. We found that 2 in 5 merchants are currently using their personal bank accounts and cards for businesses, meaning they're combining their personal and business finance, making it difficult to measure the financial health of the business, the company said in a statement. And the company is also launching Shop Pay installments, a buy now, pay later option at checkout that will give customers the option to split purchases into 4 equal payments over time. The payments are interest free and come with additional fees, the company said. Listen, I think this is huge. I personally think this is huge, and this is all my opinion. So if you are new to the channel, it doesn't mean it actually is huge. It might be a complete flop, but I just think the mindset of Shopify and the way that they've built their product and built their ecosystem, having a very core audience, focusing on small to medium-sized enterprises, and then growing that gradually. One stat as well that came out this week is that they have, prior to coronavirus, they had a certain amount of local orders. I can't remember what the figure was, but post coronavirus, those orders have gone up 176%. So effectively, coronavirus has actually supercharged their business. It's supercharged their valuation, and actually it's provided an opportunity for them to do more, which will be a lot more sustaining. And I bought this stock obviously way before the coronavirus situation, so I did expect to have it to grow this year. I didn't really have a percentage in mind, maybe like 40-50%. I don't really know. I didn't really think about a percentage, if I'm honest, so I don't want to kind of make up a percentage. But now it being at 166, I'm thinking I'll probably see if it gets to about the 200 mark, and then maybe I might take a bit off the table just to kind of do that. I'm definitely not going to add any more. It's just way too high for me to do that, and so it's now or never really with me with Shopify. And I genuinely think, this is based off no analysis. I haven't really done any of the financial analysis to come up with this figure, but just looking at the trajectory, I don't see why it can't really compete with the likes of Amazon, Google, being $1,000 stock at some stage, maybe this year, maybe early next year, so who knows. But yeah, I spent a lot of time on Shopify. That's gone up by 4.61%. The next one is Uber, and to be honest, I'm not going to spend too much time on Uber. There's not been any real significant news. Actually, let me backtrack. There's been a lot of news. They've been doing a lot of bits this week, but nothing that for me personally I attribute to the growth of 5.51% this week. So there's been news around layoffs, there's been news around lawsuits, there's been news around investigations for their deal, but other than that, it's not really tightly correlated with this growth. And obviously their earnings was already done like a couple of weeks back, which we spoke about. So yeah, it's gone up 5.51%. I'm at 14% at the moment, and I think Uber is a business that if corona situation lasts for long, then it could be in difficult times. So I'm just going to see how it goes for the time being. The last stock to talk about, that's a stock to watch, a top mover, is weirdly First Solar. First Solar is now a top mover, and the reason why First Solar is a top mover at 11.15% is primarily due to their earnings. So they beat their earnings estimates significantly. They received 0.85 cents a share versus the 0.24 cents a share that was expected. That's earnings per share basically, and I mentioned before, earnings can be categorized as profit, or it might be done on a per share basis. So this is talked about on a per share basis, and so basically they've been much more profitable than expected, which is a good sign. And it's gone up by about, I think, 264%. That's a significant amount. Last year it was a 0.64 loss. So this same time last year they were making an earnings loss of 0.64 cents a share, and now they're making an earnings profit of 0.85 cents a share, which is really strong. Revenue's gone up marginally, not amazingly, but it has gone up, which is obviously positive. So 532 million versus the 531 million expected. And so First Solar has done really well. Now, obviously, First Solar is a stock that I began averaging down to. I mentioned, you saw that I did a purchase in April where I said I'm going to start slowly averaging this stock down because it was one that I actually considered to potentially sell. Has my position changed? No, it hasn't changed at all. All this has done has expedite the fact that I think I will still sell First Solar. So at least it's obviously given a nice bit of growth. Probably, in hindsight, it would have been nice to maybe put a bit more in before this growth, but it is what it is. So I will still be slowly averaging this down. And I just think that, I've got a lot of stocks on my watch list that I really want to invest in. And when free trade are launching, all of those additional US stocks, I'm going to be putting up this First Solar money into them just because I think that they're going to have a higher propensity for growth over the course of this year and next. So I'm still going to stick with my strategy. I'm still going to average this down, but it's nice to see that it's had a nice earnings, and hopefully that will expedite my break even point and the opportunity to sell it as soon as possible. Now, let's get into the top fallers. The first top faller within my portfolio to talk about is Taylor Wimpey. So Taylor Wimpey has gone down 2.66% this week. The reason why Taylor Wimpey has gone down is because they've been downgraded in terms of their buy rating. 17 analysts that are covering Taylor Wimpey, they've reforecasted their revenue expectation for Taylor Wimpey, which has had an impact on the stock price going down. So, initially it was thought that Taylor Wimpey would be getting 3.7 billion in revenue in 2020. That's been dropped to 3.2 billion in revenue in 2020. So obviously it's a considerable amount of loss, and so obviously that's probably spooked some people, and the reason why there's been a bit of a downward pressure on Taylor Wimpey this week. The next one to talk about is Lloyds. So Lloyds has gone down to 0.28 pence per share, 5.27%. And it just goes from bad to worse really with Lloyds. So the situation this week has been there's a lot of investor backlash over top bosses pay. So basically, long story short, I will put all of these links in the description, but long story short, Lloyds have basically announced a new 3-year pay structure for their kind of CEOs and top bosses, but it's not really linked to performance. It's kind of like a flat structure, and investors have had a backlash over it, and they've actually voted against it. So I don't know what's going to happen there, but most likely it's going to have to be revised. And if it's not linked to performance, then obviously there's no real incentive for those top bosses to do things that's actually going to benefit our shareholders. Although they've tried to come and say that they've vowed to make up the difference for missed dividends in 2021, that's obviously not going to be enough. So we don't want to see top bosses getting paid irrespective of how well Lloyds do. You want it to be linked to Lloyds so that you as a shareholder have the same interest as they do, which is the whole purpose of it really. The last top faller is Imperial Brands, and that's gone down 8.53%. And the reason for Imperial Brands to be dropping is because of the fact that they are cutting dividends by a third due to the coronavirus. So you remember a couple of weeks ago I referred to them saying that there's not been that much of a coronavirus impact. Well, clearly that's a lie. It's either a lie or they're basically just backtracking, and what they're basically saying is that over the second half of the year they expect the coronavirus impact to be greater. So one of their cost cutting measures is to cut dividends by a third. So just to be clear, they're not cutting dividends entirely. Dividends will still be paid on a quarterly basis, but they're just taking a 33% reduction in the amount of dividends that they're going to actually give to investors. In terms of earnings, their revenue is up, and their total stick sales, which is each individual cigarette, is up as well, but their profit has fallen, and so they're trying to obviously get better profitable numbers, which is the reason why they're doing this. And some of their ways to do that is, one, obviously dividend cutting, but two, also reducing some of their spend on what they call NGP, which is their next generation products, so things like vaping or other things potentially in the future. So that's a bit of a downer for Imperial Brands, and that's the reason why Imperial Brands has dropped. But overall, the portfolio has gone up this week, which is great to see. It's gone up overall by about 1%, I think. I didn't calculate that, but by about 1%. It's gone up by about 1,000, which is all right. And so yeah, it's overall gone in the right direction, but it's been a very turbulent week with things happening, across the board with stocks. To be fair, the next thing I wanted to talk to you about is Shopify and Joe Rogan's. Not Shopify, Spotify. These names are very, very uncreative. But Spotify, as you can see, in the last 7 days has gone up 17.8%. It's basically soared in the last 7 days, and the reason being is that Spotify announced a deal with Joe Rogan. So for those of you that don't know what Joe Rogan or who Joe Rogan is, the Joe Rogan Experience is basically a podcast on YouTube. It's the #1 rated podcast on YouTube. I think it's the #2 rated on iTunes, and it's basically a podcast where he just talks to loads of people from MMA, UFC, but also entrepreneurs. Like Elon Musk appeared on it and he was smoking weed on it, and a few other bits and bobs and a few other people as well. So what Shopify have basically done, Spotify is going to be so annoying. What Spotify has basically done has launched an exclusive multi-year licensing deal. I think it's probably around the 3-year range, because Joe Rogan makes around 30 million a year from his podcast. That's how much he makes currently from monetizing his podcast. So they've done 100 million deal for him. So I would assume it's about the 3-year range, which then makes it a little bit more profitable. He gets all of that money or up front, or I don't know what the payment scheme is, but at least he makes more just having it exclusively with them. And then obviously they basically bought the rights to it, and what that also means is that he's going to take all of his video content off YouTube, off iTunes, and Spotify. Oh my god, yeah, Spotify's correct. Spotify is basically going to create a new video section on their platform to accommodate his podcast as well. So they're really trying to eat into the podcast market. They want to be the #1 go-to place for podcasts, whether it's audio podcasts or whether it's video podcasts as well. And so that's going to be a significant look, not just for Joe Rogan, but just for podcasting in general. And it's going to mean that a lot of more podcasters are probably going to emerge, but also the existing ones that are doing very, very well, they're going to probably be hopefully looking at some type of deal. You're probably going to see YouTube and iTunes try and fight back and do some other deals like that. It might make a bit more of a fragmented market if people sign exclusive deals, but also it might actually be good for the podcast industry as a whole. We'll see. But with Spotify making that position, they've obviously gone up 17%. So in terms of their valuation, they've gone up probably about 2 billion, 2-3 billion, maybe more actually, in terms of their market cap valuation, just by doing this deal. So that 100 million that they've laid out to Joe Rogan is pennies on the dollar when it pertains to the value that their business has created. And there's a lot of articles talking about how Spotify, if they continue this model, they can go to like $500 and share and blah 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 blah. So I asked everyone to put their stock to watch. I'm gonna put Spotify as my stock to watch, so I've just added it to the watch list there, and so I'm going to put that as mine. So you guys definitely put what your stocks to watch are, but mine's Spotify currently, just based off this, because I just want to see how the industry goes as a whole, and actually whether this becomes a potential investable opportunity. Like, I don't really know, all these price predictions, they're all just finger in the air estimations. You can do all of these different types of metrics and calculations, but ultimately no one really knows where share price is going to get to. However, this is an interesting move, and I think it's something worth noting about, because it might really change the trajectory of podcasting and the value of Spotify over the long term. So yeah, that's what I wanted to talk about. But yeah, that's it for today. Short and sweet, hopefully, not too long. Hopefully you found this video useful. If you did, like, comment, subscribe, and yeah, get in the comments what is the stock you are watching. And obviously, got any more comments, hit me up in the DMs or whatnot, and I will get back to you as soon as I possibly can. Other than that, have a good weekend, be safe, and I will catch you next time with another investment video. Peace.